7 November 2023, Trade with the Boys, MAO with Kel once again. Now, Dow may drop back to 33,285. Now, we know that the Dow is going up and everyone is jumping with joy. But more important thing is that I think it's time to book all your profits because I believe that there could be selling soon. And in fact itself, I said this 10 days ago. I said that in 2 weeks' time, we will hit a peak, and that is where the selling will begin. So let me tell you more in detail. Let's go. All right, before we go into that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, right, let's recap what happened. Okay, I've been away for a while because I was pretty under the weather and lots of events, but we can just review what happened. We mentioned that the stock market in China will have a short-term rally despite Li Keqiang's death. And in fact itself, we saw Hong Kong rally from 17,000 recover to 18,000, which is like a 1,000-point recovery in just 4 trading days. So it was really in line with whatever we said. But of course, there's something that I need to warn you guys is that if you look carefully now, the high on each cycle is getting lower. Hence, therefore, I think that it's time to take some profit. All right, so this is going to be very important. You need to take note of that, okay? And moving on. One thing is that if you remember 2 weeks ago when we talked about the fear and greed index, it was trading at below 25. And we said that at the point itself, must be careful. The market most likely will do a rebound. So let's go back there again. So this is a timeline. You can see it went down to a low of 22, which on this 27 October. And that was whereby the fear was extreme. And again, the thing is that a lot of people was calling for sell, but we noticed that it's a bit low at the bottom. So we believe that the market will likely rebound. And truth be told, right now, it has rebounded all the way nicely back to the moving average. Now, one thing to take note is whenever the market is too far away from the moving average, you notice that it always will come back to the moving average later on. So it has been happening for quite a few times, and this time around, we are back here again. So to me now, this is a good time to take some profit because you don't want to be holding something when everybody is actually knowing that there's going to be some selling coming in. I'll tell you more in detail. So with that itself, right, remember back in October itself, right, whereby everybody was kind of still bullish. And then after that, as the month progressed, we come to the November itself, the 1st of November, wow, the bearishness hit 50%. So that was why I tell you that the market will most likely rebound. And of course, if you look at the CTA positioning by Goldman Sachs, you can see that on the 1st of November, they were really at the low end. They're buying a lot of puts. So basically, whenever you see this happening, you know that the market is oversold. The market will most likely rebound, which actually happened. So the thing is this right now, the US market has a big rally, but the question is this. With the Dow score the best week since October 2022, okay, that one is fine. That's kind of for the whole year. But the thing is this, you look carefully right now, right? Although it looks fantastic, but we look at the economic figures, we have something to worry about. First of all, the ADP numbers came now lower than expectation, 113,000 jobs versus 150. This means that, right, the private sector itself ain't doing that well, right? Okay, moving on, the ISM manufacturing PMI, ESG go down lower. So of course, again, you say that's good, right? Isn't that good for inflation? Well, it is, but staying below 50 is not a good sign. And then if we look at it, the Federal Reserve has actually basically, hold interest rate, which I told you guys they will hold. Now, the thing is this, we were expecting November to hold because in October, we saw that Federal Reserve have paused. So which means that, by right, Federal Reserve should have increased interest rate by November, but by choosing to hold interest rate basically tells you a lot of problem is actually behind it right now. And of course, initial jobless claim has increased a bit, but more important is the non-farm payroll. Now, the thing is this, what stimulates the market from last week and now is because the non-farm payroll is below the expectation, which means that the economy is slowing down, is what the Federal Reserve wants. But of course, when you do that, at the same time, that means that there could be a possibility of a recession coming in very soon. And of course, the unemployment rate has went up from 3.8 to 3.9%, inching up, the same thing I mentioned. And of course, the ISM non-manufacturing PMI has dropped, all right, has dropped. So basically, all these tells me that, right, the behind the scene itself, the economic figures are not really doing that well. And of course, we all know that Jerome Powell will be speaking. And if he actually take the position of, again, potential interest rate hike, because there's one more to go in December. And if he doesn't deliver, that means that whatever he said the whole last 6 months is out, the credential won't be there. And of course, if the market is jubilating because of the no interest rate hike, then of course, you'll get a worry. And that's the reason why I feel that you should take some profit off the table. And more important, you can see right now the bond market, where you came on to 83. Remember, we tell you this to take profit, right? Because not only I'm going to take profit, but you can see that the market came down, the huge volume came in. Now, when the market is coming down and volume is climbing, that's fine. But when the market goes sideways and the volume stays strong, that means that there could be a chance of short covering. And of course, you can see immediately from 83, it bumped back up to almost 90. So imagine that if you don't cover here itself, you lose at least 5% of the profits in just a matter of days. But the question is this, the bond market basically hits about 89 and then yesterday pull back down again. Question is, why is pulling back? I thought it should be going higher, right? So that means that there are people still kind of worried, and this could be just a short squeeze. So the thing is this, if you look carefully right now, we know that, I mentioned this when this Bill Ackman closed his short position on the bond market. I told you guys to buy back a position, and it really happened. And also, I said this out, the US market may face turbulence soon, 2 weeks' time. So that was 10 days ago. So which means right now, I'm informing you that now will be a good time to take profit because the target is happening, right? It means that I said 2 weeks later, we will see a market peak, all right? So if you look at it right now, the US 10-year yield is pulled back down from 5% all the way to 4.63%, but it now is holding again. So if let's say the Jerome Powell comes in and stun the market with an interest rate hike, this figure will bump up, and of course that will basically bring the stock market down. And of course, during this period of time, we saw the US dollar coming down all the way from 107, came back to 105. Of course, basically people saying that, okay, that means Federal Reserve is going to pump more money in the market and the system. Well, it is very, very possible, really depending on what Jerome Powell will say. Now, if you continue to pause the market, then very high chance the dollar will weaken, and then that will bring the market lower. But of course, if Jerome Powell stick on his position of hiking interest rate, this will bring it back to 106 again. All right, so of course, if you use it on a TWB system right now, my forecast for this for today and tomorrow, let's take a look. Let me just share with you my coloration. Okay, so basically the big boys are buying, but you can see very clearly itself, right? The buying magnitude itself is kind of not there. And of course, the next thing is this, my KRW is still positive. So overall itself, the market is still buying, right? Okay, the one thing to note will be this MA200, okay? 34,021 for today. It's the MA200. The Dow has to stay above it. Now, if the Dow breaks below 34,021, this will bring it back down to 33,707. And of course, if you look carefully right now, that the MA30 is at 33,442. And I said before, usually the market will love to pull back to the moving average. So that is a possibility. And of course, you look at the NASDAQ, this is something interesting right now, but the NASDAQ has been climbing all the way because the boys have been buying, right? You can see that the bullishness everywhere, but today itself, there's some form of bearishness. It's still too early to call because normally we don't use KSI on the day itself. But then again, I want to share with you, we have a very interesting tech stack over here for the MA30 and MA200. So if there's going to be a pullback, it may pull back down to where it is here, about 14,700 area. So where the NASDAQ right now trading is 15,146. So which means that there could be a 400-point pullback. And that is whereby, again, I want to repeat, it's a good time to consider booking some profit, all right? So with that itself, hope you like, subscribe, and share my video. This is Kel signing off. Take care. Bye-bye.